Broadcast. Welcome to the 23rd episode of the Zaner MarketCast, your one and only spot to keep up with all of the agricultural market news. We won't get to all of the news today, Dan, but I think we're going to get to some of the pre-WASDE report estimates, wouldn't you think?
Yeah, I would hope so. I mean, if we can't get through at least those before our time is up here today, getting us ready for the report tomorrow, we haven't done our jobs. But like Joe said, not all the news, but the stuff that matters here going into the report and what guys like us are looking at, right?
I'm Joe Nikruto, and I'm here with the brand new yet 2.0 Big Daddy.
Yeah. Father
Dan
two-time over
Hussey.
now.
Two times two kids. That's terrific.
Yeah.
Congratulations, Dan.
Yeah, mom and baby are doing great. We delivered, or she delivered. I stood by patiently and watched.
Doing the hard
waiting,
part.
Right? Doing all the heavy lifting, right?
Smoking a cigarette outside.
For our second, Michael Barrett Hussey. Kids.
Congratulations. Welcome to the world, Michael Barrett.
Yeah, now I've got to navigate the world with two little boys, a toddler and an up and coming toddler, right? I mean, it's I mean, you're on the opposite side of that spectrum. You're shipping your kids off to school, off to college, sending them off into the real world, right? And I'm just signing up to have mine for 18 years under my roof.
Light at the end of the tunnel. I will promise you that it goes way, way faster than you think. You know, when I had two kids in diapers, they said, "Oh, they go so fast. Enjoy it while you can." And you, of course, as you know, you don't sleep, some nights almost at all, and you think there's no way this is going to go fast. But I swear to you on all things holy, just like that, you're sending them off to college with a tear in your eye.
You forget about those sleepless nights, but you're right. It does go quick. We just got our 2-year-old kind of potty trained. I was like diaper free, and now I've got, I'm right back in it. So it's a vicious cycle. It seems like you begin where you or where you left off here too, though. But anyway,
you could have had one kid and been an empty nester in no time and spent all your time and money traveling. But no, you got to have two kids. And
right.
So if you're going to have two, you might as well have 4 or 5, right?
Well, that's the irony. Right now, the wife decides that she needs to have her daughter, so we're gonna go down that slippery slope and and try again. No, but I couldn't be happier. Very blessed, grateful, and thank you for everybody for your kind wishes.
With good reason.
This week in markets so far, I mean, we've had pretty much. I mean, let's take a step back, right? Last week was a pretty good recovery. I think it was a breath of fresh air to see beans back above $10, corn solidly back above $4, and then yikes, the last couple of days, a little bit of a pullback, set up into what could be, some bull flags there forming on the short-term technical chart, and then today, that pre-report jitters. Did you see anything today that shook your world, Joe, in terms of price action or anything else?
Some up and down, right? Certainly choppy in front of this report. I think there was a weather update that said maybe they're going to get some rain in one of the drier areas in Brazil. That brought the market down. There was like a 4,000, you and I are always watching volume. There was like a 4,000 contract spike in corn, which opened today at 404. The high was 407.5. Low was 401.25. Closed at 404.75 on the day. Dan, we're not talking weekly numbers. On the day, down about a half, fractionally off. No great shakes around the block to get to the house next door. Of course, the funds still short 162,000 contracts. Do you care to discuss anything technical? 10-day moving average 404, 18,399.75. 50, 404 and 7/8, kind of moving average spaghetti right there, right?
Yeah, the 7-day and that 55-day are smack dab right up there at highs of the day at 407.25. The 399.75 area, that's where our 18-day is. So to me, we're caught kind of between our longer term, slower moving average there, that 55-day that has been resistance now for the last week. We only spent about half of a day there. What was that? On the 6th. Last week, half of a day above that moving average, that 55-day. We've been really below it here and held below it as resistance now for the last week and a half. If that continues to hold into tomorrow's report, can we break the 18-day and fall apart? Maybe. But if we go above that level, that would be the technical sign, and certainly a breakout of that bull flag could lead to, some more upside, right? But intraday, we've had kind of an inside day of price action. I don't believe, or at least for beans, we did corn. We made it a lower low and lower high. So we did, kind of have that candlestick pattern that was bearish, but still closed green, right? And without any real direction. So again, kind of that lackluster day performance wise before a report, not too unexpected for a market to be unable or unwilling to pick a direction. And here we are
Real
caught between
resistance.
55-day and
Real
that real
resistance
support.
coming in on the 6th of this month. We've got a high at 416. July 24th, you've got a high of 423 and 3/4. And I would agree, if we don't hold that 18-day, what do we always say? Predicting the future is tough business, right? Or prediction is difficult, especially about the future, Albert Einstein. But if you don't hold that 18-day, so what do we got? 370 down there. Well, previous lows. I thought I wrote down the previous low, but I did not. If we don't hold that 18-day, we got problems, huh?
Yeah. And maybe after and to and through a report like this, it wouldn't be so far-fetched to think you get some capitulating, move lower into a new low, flush the book, so to speak, set a new contract low, and just in time for harvest, right? And now we can talk about harvest time frame low maybe being formed off the back of a news report. We're just two guys talking, but it's a narrative. I wouldn't be surprised.
Tighter than we think, maybe.
Right. If this time next week we're sitting here looking at what the USDA did, saw a reaction in the market that went down, and whatever, and has bounced, well, we'd have another story to tell. But there's a lot that needs to happen there.
We've got ADM talking today about corn production coming in at 15.120 billion bushels yield. They see yield, ADM Investor Services, 182.8, and ending stocks at 2.017 billion bushels. We've got a news story. What do we got? 15.154 according to, is that DTN? Dow Jones, Dan? Is that what it is?
Well, so are we talking the field data that's to be included in Thursday's September USDA report?
Certainly. They're going to be using USDA test plots, real USDA test numbers. And I'm mentioning what I'm opening with is, hey, let's talk about range for crop production. Let's talk about range for yield. Do you see anything in ending stocks for corn that can get us anywhere, I guess is what I'm asking.
A lot of these numbers are in line, with what we've kind of been talking about up to this point, right? It's up to the USDA. Range. Exactly. And it's up to the USDA to some extent to kind of surprise the market one way or the other now, because we've been chewing on these like a bunch of cattle for the last, 3 months now? There's been very little change. I do think people have been, have had their eyes open somewhat to that soybean yield and maybe expectations now. You can see the trade maybe expecting a little bit of a higher yield there. But I know we're talking corn here. It's hard to not jump over to the soybean side because I don't have much to say in terms of the corn production side and the balance sheet there that they could really shock us with. And I almost feel like this is the type of report that needs to get out of the way. Maybe it ends up coming in a little heavier than people would have loved to see, but rip that Band-Aid off. Now we know, what that big number is and what that windfall of grain is going to be coming down the pipeline, and we can now trade around it, right?
And some talk on the other side of the coin is that maybe you could see a yield reduction. It has been hot, and they are getting out into the field, so you wouldn't be surprised to see different data. But 182.8, for ADM. And then, what is the downside?
Do you want to point out that
report? 180, 181.
There's a fairly good range on that yield, from a 180 to 83 area. That 3-point range, nobody's willing to really say or expect a big hit to yields to take us below 180, at least on the USDA standpoint. But I think a 181 would be enough to the downside, considering the average trade expectation right now is a 182.40, and the high end of that's 183.50. 181 and anything below would seem like a pretty good surprise in terms of a yield cut at this point.
I think that's enough said. So for beans, we opened the week 996.5. The high was 1008, low 995.5. close. I'm sorry, we did not open the week. Open the day. I'm just so used to saying weekly numbers. Closed the day at 10 even and a half. That was up 3.25 on the day. Funds are short 154,000 contracts. And here again, your 10-day moving average comes in at 10.04 and a half. Your 18-day 991. Beans have been holding 991. That 18-day moving average.
Yeah,
it kind of looks okay. You get down below that 18-day moving average, maybe, a lot of folks thinking that, and our own Ted on Market to Market the other evening, talking that maybe this bean yield number ultimately is larger than the USDA, larger than Pro Farmer, and folks are not really prepared for that. And that has kind of been my experience. How about you?
yeah, and I think the first eye opener was on tour, seeing those pod counts come back, right? Then okay, there's the potential for a monster crop here. Then you look at the weather reports and everything else between then and now. It's hard to have a narrative, at least in a broader sense across the country, say anything else. So I am expecting it a little bit. You mean, hey, I was giddy there talking the core numbers. I wanted to talk about the what I'm seeing in the trends with the trade here. Almost somebody wanted to, and they didn't. I don't know who it was. Well, and I mean, actually, I should go look, and I wonder if it was Ted, the 54.9 high end of that trade range for the yield. Somebody wanted to put a 55 print there, and I kind of wish they did, just because. Look, we're up to 53.2 in terms of the trade expectation on yields. We started this year down, at 52 and below, and last year at 50. That's a pretty big bump year over year to those yields. And this is all, again, I remember adding some acreage there that I don't know, there's guys out there, they'll still say there's more acreage of beans there to be added. I don't necessarily believe that's the case. I think some of these
upwards
acreage
of
numbers,
5 million acres, some people talking, right? I mean,
yeah, right. Like, and I'll believe that when I see it. But right now, I think the yield is the place that we can all at least agree we're probably on the higher end of expectations in terms of where we've come throughout the year, right? And the potential's there, right? And that's where, if there's ever a year to think that it could happen, if you walk into your fields and you're seeing it there, maybe this is it, right? We'll see.
ADM numbers have production at 4.615 billion bushels. They're coming in with a 53.5 bushel per acre yield. But here's the 2024 carryout 580. Right?
And they're even above the trade here, right? Like, those analysts are even saying something. So
that ending stock number, that 580, what we have heard around here, maybe from Ted, is that maybe those ending stocks numbers, the market not necessarily prepared for that. And so you could be running headlong into the potential for another leg lower here. And you hate to say it, technically, we have been here before, right? That chart looks productive. And if we can get some sort of different update than we expect tomorrow, maybe there's some more work fundamentally to be done. And again, we always say, you and I, we're certainly interested in the numbers. But then we wait and see what the market reaction is.
Right. We want that reaction.
How do we close? Sure.
We want to see how the market's digesting that. We know what they're expecting into a report. Now we want to see how the market reacts, right? The actual, where the rubber hits the road. And then we can, determine where maybe the next tread may fall, right? That's the best we can do.
Anything we can hang a Zaner hat on, technically, on that chart that you see, that would make you expect that bullish price action is in the offing, or to the other side. Do you see anything here that makes you think, oh man,
again, like corn, fought between that 55-day and 18-day the last couple of weeks. We've got a little bit of a bull flag right now on soybeans. I don't like how we found July's low as resistance right now. That seems to be kind of the first stopping point. There's much better resistance, much higher, around the $11, $11.20 area. That's where your 55-day, and when you're talking, your 100 and 200-day moving averages. Once you get up to that area, we're not anywhere near that. We got to clear the 55-day and the highs of this month, to start a trend up to those levels. we're in a bull flag. We reestablish and hold here above $10. We can get back to 10.20 and retake the highs of the month. I see no reason why this couldn't be the start of a leg higher. However, it's also rolling over right at areas where you could expect some trend resistance for a much larger downtrend that is maybe not complete. And seasonally speaking, right, expecting a low at the earlier part of August for both of our row crops, not statistically the most normal thing to happen, right? So in a year where we're expecting maybe a bigger yield or better crops than expected, it's not a year where I would expect an early harvest low. Let's put it that way too, right? If all expectations now are for what could be a record soybean yield, I don't think the lows on the chart are safe from a fundamental standpoint. So it makes it very hard for me to look at this bull flag and get very excited without what Joe said. Let's see the reaction, right? If it's there, we can hop in. You might miss 20, 30 cents of the move, but guess what? The next levels we're talking about are maybe towards $11, right? I mean, that's a whole dollar higher. But be cautious here because we start to slip below 10. We get negative reactions from that report. You're back below that 18-day. And now, the market could be going and revisiting those lows and making a new contract low. And arguably,
you could put an 8 on this.
Yes, and absolutely could. And arguably at that point, maybe even your harvest low. And yeah, you could put an 8 on it. I'm not huge into picking a downside target just yet. If we got a little bit lower and closed below the 18-day, I would have enough to maybe measure, but I guess it could still measure from where we're at. I mean, I would say that somewhere around 875 from where we're at could be, a potential leg lower from where we're at right now. Not saying we're going there, but technically speaking, I think there's a lot before then that can hold like $9. And hey, let's just see how we react again at 950, going down there. But from a technical standpoint, there's wizardry out there and lines on a chart that that somebody's looking at, right?
Merely derived. How about a little housekeeping with wheat? We opened the day at 573. High was 582 and a quarter. Low 572. Last trade I saw was 579 and a quarter. Up 5. Wheat. There again, 10-day. What do we got? 565 and a quarter. 18. 554. 50 at 563.
55-day now. At 566.
Wheat, the technical leader here. I think you could say you got real resistance. The 4th of this month, that high was what? 582 and 3/4. I wrote down 582 and 3/4. We almost got there today, 582 and a quarter. Yep. And so wheat kind of knocking on the door here. Funds are short 33,000 contracts. I don't really view that as major fund fuel. I mean, if they have to cover it, it will help. ADM number that caught my eye this afternoon. They expect the USDA to increase exports by 20 million bushels and decrease ending stocks to 808 million bushels, which I still think is a pretty healthy number, right? But could be.
It's a good reason why we're sub $6 wheat, with that type of ending stock.
The global situation in wheat could demand that you start to see more exports or continue to see exports out of the U.S. and maybe that brings prices higher. I'm not sure.
Well, there's always now the conversation that you can jump into with the dollar, not to switch our gears and all of a sudden become, currency traders here, but the dollar
and the dollar kind of symbiotic, right?
Right. And the dollar's been kind of getting hit here more recently. I guess since the end of August there, we've had a little bit of a bounce, but generally speaking, since July, there has been a substantial drop in the dollar, 5 whole points on the Dixie. That's the dollar index. That's a substantial move, 5% move in the basket of currency. That's not something to sneeze at. And along that same time, it's interesting to see that, hey, from basically, the end of June, early July, through August here, we've seen a, similar a period where wheat has been able to bottom as well. If that dollar reversal is a catalyst for any continued rally in wheat, well, it may have some outside macro things there that attributes to the demand that would help a chart like this rally. But again, above that 55-day moving average, that's a good close here for the last 3 days. The wheat market has cleared those levels. And like Joe said, as we come up on those highs of the month, we're kind of clearing out what were lows from July, those summertime lows that originally held as support, we broke below. above here on wheat, it's hard to find any new levels or another level, major level before maybe the around $6 or that 620 to 624 area where both the 100-day and 200-day moving average are. So wheat's a
That
market where we
provide
can
any
talk
real
about those big
resistance is what
ones.
you mean, right? It's hard to
Yes, that's
find
what I mean.
real resistance
Real
or potentially
resistance.
real resistance.
The next, level, right, that I would expect some market participation, some volume, and that resistance on a chart.
For sure, for sure. So we had a news story, but it feels like maybe we have covered a lot of that. You want to knock that out real quick, or
Yeah, I mean, USDA corn and soybean production estimates, coming from DTN here, that field data will be included in Thursday's USDA report. So we all know that now we're going to be getting, that all that real, actual data now, not just, I don't want to say scientifically derived guesses,
was
but
was satellite imagery and survey
right,
data, but now we're out in the real USDA test plots, right?
right, right.
We're
Analysts are
big fans of
expecting
the eye in the sky.
right, modest changes in the numbers, but there's still room for surprises this season. I think we all know that. Dow Jones survey of analysts expects USDA estimates to come in at 15.15 billion bushels for corn crop in 2024. We already know these, based on a record year of 182.7 BPA. Corn ending stocks in 2024-25 are expected to be cut 2.073 billion bushels to 2.009. Still the highest in 6 years, if true. So again, right, even after these cuts, it's a big number. World soybean ending stocks in 24-25 down from record highs of 134.3 million metric tons to 134.20 million metric tons, or 4.93 billion bushels. That's a new season that looks initially bearish, but has a long way to go. And again, I think that long way to go we're alluding to is an export market that needs to prove itself. And with a falling dollar, man, if there's any problem for adverse demand, it's lower prices and falling currency. I'll tell you, that's a perfect catalyst to see some exports and some stronger demand here going into the end of the year. But we'll see.
And so that sort of leads me into our question of the week segment. And normally we've got a question from Carter, but this week I think we might operate without a net, Dan, you and I. And so I'm sure that you are fielding the same calls, the same inquiries from customers and potential customers alike. What do I do down? What do I do here? What do I do now? Some guys have beans. Some guys have a lot of corn. It seems to have been a pretty regular topic of conversation. So what now? And so we can't say, well, what now? Should have listened 6 months ago, should have listened a year ago. That's not our job, right? What now?
What now? Hey, we're still 50 cents off. We're still 50
now.
cents off lows for soybeans, still 20 cents off corn. I mean, these are the best lot prices you've had effectively since July to get some pricing done if you haven't done some sales. And I'm not saying go out there and sell everything, but this is the type of place ahead of a report like this. I would think it makes sense to try to find a way to own some puts. If that means you sell calls above to help pay for those puts, that's another story. I'm not going to get into selling options here as an idea.
We're speaking generally, right? We're not necessarily, this is not specific strategy for any one individual, but we're just speaking generally.
And when I say buy puts, right, or get a floor in here, I mean, hey, we are well off the lows. Right? That's what you want to see when you start to think about putting a floor in for doing some protection. I'm not saying we can't go higher and there aren't going to be opportunities for reownership here, but I think that the first move off the lows has been had. It's done. Reownership from here has to get through a WASDE report. It's got to get through a harvest time frame. So there's going to be some up and down and some fight over that trend before I think maybe it sets in. So I'm still playing the protective side of things. I am looking for, another low, just capitulating wise and seasonally, because I don't think it doesn't make sense. But I'm also watching closely those levels we were paying attention to, Joe, earlier today. That hey, we continue higher. There's some bull flags on the chart. There's some levels we can trade through and some short covering that can take us yet higher. So I'm also quite aware of that. But I think this first move off the lows, this 20, 30 cents for corn, 50 cents for beans that we've seen, hey, take advantage of it if you haven't already. There's plenty you can do certainly even just ahead of a report tomorrow still. Um, some opportunities that we can talk to you about and be happy to.
Absolutely. I agree with you 100%. If we do see some downside, we're going to look back at this and say, here was an opportunity, right?
Mm-hmm.
And so why not avail yourself of the tools? Stuff doesn't seem to be exceedingly expensive.
No, options aren't crazy right now,
No,
like in
they don't
terms of
seem to be
protective
out of
options,
bounds,
right?
right?
Yeah.
Yeah, you can get some real good coverage. Whether you do the overhead stuff or not, that's right for some people. For other people, maybe not so much. But the interesting thing, and you have stated this, we've talked about this a couple times today and in the past week or so, is that if we are seeing some sort of technical turn,
Mm-hmm.
we will be able to take advantage of that, right?
Yeah.
But
Yeah.
not being protected here, there's an opportunity, and maybe one should avail themselves of it. These are not
And
the lows,
right.
And if
And
we
let's
go
put
to
it
the
this way,
lows,
right? The last few days haven't been an uptrend, right? We've actually been pulling back from a high. Today, don't get me wrong, there's a lot of hope that today's lows could hold and you reverse today and you break through the highs, you get this big move up higher, right? You get, you
productive
get
looking price action for sure.
exactly, productive looking price action. But if you continue to roll over, and that's a movie that we've seen too many times play out as well, and no one knows exactly how this story ends. But I can tell you that, hey, into a report, when a chart's looking the way it does like this, it makes sense to be somewhat protective because many of you are already in a position, right? You wake up long in the field, long in the bins. You're already trading. Um, you've already got a position on for the most part. So as many of our
Amen to that.
viewers who are out there doing God's work, producing all the things we need in this world. But so with that being said, we'll check back in with you, I think, tomorrow. We're going to get back with everybody in a post-WASDE thing either tomorrow or Friday.
Tomorrow or Friday. Yeah, sure.
Yeah, we haven't. Maybe Carter had made the decision, and I'm just too overwhelmed with a kid. But I'll be
Could be
ready and willing to bring those WASDE numbers in the post report to you guys. With all that being said, thank you for listening to the Zaner MarketCast today. If you need more, just because you can't get enough of us, you can follow us on Facebook at Zaner Ag Hedge, or on Twitter at LinkedIn, and at the Zaner Group. If you've not already, check out this daily Ag Hedge hotline. You can get the sign-up information in the links provided. And best thing you can do, call in every day because it's completely free. Hear from our one and only Ted Seifried and get an update from him on all the up and comings in the agricultural market. Thanks again, and be sure to like, comment, and follow the podcast to not miss a beat. And we'll be back with you as price action develops. Take care, everyone.